Of course, the thing is that Seven West, or Seven Network, has paid for the free-to-air rights, right? And that's where most of the money comes. Telstra's paid $153 million for the internet rights, which is a small fraction. And the interesting thing is that on the day before Anzac Day, Seven West came out with its own profit warning, and everyone's saying that actually it's because of the extra cost of the AFL rights.
Well, I think
the stock absolutely got hammered.
Sure. Yeah, well, I think, like, a couple of things. Seven West were being a little bit cute putting the statement out just before, after the market closed, just before a public holiday, so they deserve to get hammered on that ground. What surprised the market was that their costs increased so much. I think we all knew, as we've talked about all programming, that the economy's slowing, and so advertising revenue's slowing. But what we didn't know is that their costs were a lot higher than they expected. Now, one of the clear reasons why is that they're paying an extra $100 million to broadcast the AFL, and so that's got to be recovered somehow in advertising, and it's not.
Right.
On that point of the stock getting hammered, it's interesting that since the Seven West deal was done, Seven West, that stock is now down about more than 50%. And Myer, in comparison, which is one of the worst IPOs in this market that we've all been talking about, it was at this stage, which is 9 months after the re-IPO or the deal, was down only about 20%. So you could see how badly Seven West has gone.
It's a total disaster, isn't it?
Yeah.
It is. It's very difficult to understand too. I mean, why it was hammered. It wasn't just because they put the statement out, it was because it came as a complete surprise. So Seven are actually doing reasonably well in revenue terms, but no one forecast this uptick in costs, and we don't know if it's just the AFL. What we do know is that as they have this interest rate deal, they have $2.1 billion worth of debt, and as their EBIT cover falls, their interest rate will increase. So I think there was a bit of panic selling associated with that, but there's a lot of uncertainty.
Makes you wonder, though, whether Seven would have been better off spending the money on, not on the AFL, but on The Voice, on that show that's doing really well for Nine. I mean, look, I don't know whether Nine's actually gaining on Seven as a result of The Voice, but well, the advertisers, I bet you it's not as expensive as...
Sure.
The AFL.
Yeah, the advertisers aren't saying that. Seven's had a very, very good start to the year, but remember, well, the Olympics are in the first half of next year as well, where Seven's revenues would expect to be soft. Next financial year as well. So we may be seeing selling ahead of that. I mean, we know what the result will be at the end of this year, but it's a disastrous result. Second half is almost half of its first half.
It's amazing.
That's incredible.